The National Retail Federation expects Americans to shell out $980 billion this holiday shopping season. That's about a 3.5% bump online and in store. It would mark the slowest rate of growth in 6 years, it's worth noting. Joining us now, Jack Kleinhenz, National Retail Federation Chief Economist. Jack, good to see you here. Prices for merchandise this holiday season, even considering the promotions, seems high. How do you think the consumer is going to react to that?
Well, happy Black Friday. And you did mention that we are looking at 2.5% to 3.5% growth. In fact, I expect it to be at the upper end. So when you ask about prices, actually, retail prices have been down on a monthly basis on a year over year by almost 1%. So at this point, prices are very competitive for retail purchases this holiday season. And we think that the underlying state of the economy is in a good place. So despite interest rates and still some elevated inflation, we're kind of confident this will be a very good holiday season.
Jack, are those prices competitive because of discounting, right? And so then does that have implications for retailers' margins if they're still paying what they have been paying for the wholesale product?
Well, certainly margins enter into the calculus for pricing any merchandise. But, I'm looking at the BEA data just released on Wednesday. When you start looking at it, while margins might be a little bit tighter, and of course, this time of the year is when discounts and promotions are at the highest. And so, excuse me, how you can project forward in terms of earnings, et cetera, it's really difficult at this point.
Jack, it's very likely that we will get tariffs next year. Will they put the consumer, will there be a consumer recession as a result?
Well, that's a great question. And of course, the tariffs that were placed on back 4 or 5 years ago, or the previous Trump administration, were tariffs on intermediate goods. So they weren't on consumer goods. Our analysis so far that if there is across the board tariffs adopted on consumer goods, it would really put pressure on family finances, and as much as $78 billion annually that would reduce consumer spending. So the concern I have, obviously, is we've been making headway on inflation, and this should definitely reverse that trend. But more importantly, it would likely result in job losses. How much of an impact? Certainly at this point, I can't say it will be recessionary. There's just too many unknowns. Trade is a two-way proposition, and you will see countries will retaliate. So it could very well be significant pressure, but nonetheless, the American consumers are the ones that we're most concerned about.